they have to go conventional now. So they still have 3% down programs, but on their appraisals, let's say the appraisal gets messed up, right? You can still send out another appraisal.
Right.
It's not attached to a case number. The value isn't there. Versus if you do it with an FHA and you put down one value and put back one value, that value is pretty stuck to that case number of that house.
Right.
So it just gives you a little bit more options. They both have their pros and cons, right? If we go back to FHA, the credit scores could be down to the 500s. So, if you have a lower credit scores, the DTI, meaning your debt to income, it could be on the higher end.
Right.
Versus conventional, once it hits that mark of, let's say, 45, meaning 45% of your income to the debt that you're about to take, it's done, if that makes sense. Once you go past that you can't be a cent over, a dollar over,
Right.
and it's kind of that hard. But versus FHAs, they're a little bit more lenient because they want those kind of borrowers. They want to give them opportunities.
Right.
Alright, so I don't mean to cut, but just so you know, we actually streaming this whole thing.
Okay.
Okay. So
Thank you.
with that in mind, I'm just gonna introduce Anthony Kwan. He's gonna be our presenter for the mortgage portion of this. I also have a title company that we're gonna do a quick presentation of it. If you want, I can actually
I got it.
do control.
No.
Alright, so basically, we have a title company who's gonna talk about title, a little bit about, which I think is good for you guys, they're new agents. So this whole event is being streamed online on Facebook, and YouTube, and X. Okay, so if you know someone that might benefit from it, you might want to put it in. So basically what we're gonna do is we're gonna talk about FHA program, conventional program, non-QM program, and how they can benefit you in regards of creating, do a deal for your client, because not everybody comes with the regular cookie cutter type of deal. So we have a specialty that we can do no dogs, limited dogs, so different ways to create income. Okay. So with that in mind, I'll give you Anthony, and then we bring Sergio Pastor, who actually has great experience in title and so he knows about law and a lot about real estate. Okay. Anthony, you're on.
So again, we were going over some of the programs. One of the things they tell us a lot is that no one wants a mortgage, right? They want a house. So as you're showing them, keep that in mind, that it's the house that they want. The mortgage is what they need to get there. So I'm going to go right through conventional, right to non-QM. So these are just ways that they process loans. Non-QM means non-qualified mortgage. So let's say you're a self-employed individual and you need to show the bank how you make your income, right? So there's a couple ways that they calculate. They use bank statements, that's one, and profit and loss. There's more than that, but these are two that we have on screen right now, right? The bank statements. It could be a personal check, personal accounts, business accounts, or both. A scenario we had just pop up is that someone who opened a business account 3 months ago, they need 12 months, but they had a personal account 9 months ago. So we combine the personal and the business for 12 months of income. They use the deposits to the withdrawals, and they measure what kind of deposits you have. If it's Zelle, Venmo, and if it's business related, then it's income. If it's rent or something else that's clearly labeled, then it gets excluded. This is good again if you do put a lot of deposits, if you're just kind of like a smaller shop but you get a lot of income. This could actually up your income. So someone who might think, I don't have enough income for this house, we could try to calculate and we could try to brainstorm and get them in the bank statement. Okay. Let's say we see their bank statements, they're pretty close to it, but we don't like how close they are to their DTI, then maybe we consider a P&L. A P&L is backed by an accountant, a CPA. It's a profit and loss. It shows all their expenses, all their income, and then at the end there's an income calculation, and we use that to determine your DTI. So It's just another way for them to calculate your income and another way for us to close on your loan.
How many months of P&Ls do you need? I mean, how many years P&Ls?
So you could do 1 year, 2 year. We have a lot of lenders because we're brokers, right? We could work with as many. They have different guidelines and different rules, overlays. So some require 3 months bank statements to even back up the P&L. If your borrower is good with 3 months, their deposits are fine, then they get that P&L program. If they have the 12, then they have the 12. Again, it's just ways to kind of have confidence in your buyer that you're going to get your loan done, right? So, yeah, any questions on that? These are different. A lot of people don't see these. Yeah, income is based on P&L. Some lenders require 3 months. Like, let's say you're a person who gets a lot of cash, right? But you're not going to deposit $20,000 in your bank account cash. That's when you might go P&L. Let's say you get a lot of cash, you deposit a lot of cash, but you don't want to give me 12 months of your bank statements because you're $45,000, $55,000 in deposits. It's almost a headache because we all have to go in through those and say, where is this coming from? Why is this coming from? But you just have a regular business, if that makes sense. Like, it's different if it's 121 month and then 9 months you don't show anything. But to the bank, they want all those deposited, sourced, and explained. So that's why you might go P&L, and it might just get your loan done quicker. Again, this is stuff that it saves you time and it gets your check faster, right? Because I want it to close so you get paid faster.
So this is for people like with atypical kinds of income?
Yeah, exactly. Like,
Self-employed people.
Yeah.
We're working with a renter and she's like 19 and, according to her makes $20,000 a month modeling on Instagram.
Oh, wow.
So
yeah. Appraisal comes out, they pay for it. They put down how much they believe the rent would be according to market value, and that's how they calculate your DSCR. Sometimes they don't require anything down, but it takes a lot. Some banks require you to be an investor for not a long time, but they want to see that you're invested and that you're not a first-time investor before they give you this loan. Just something to keep in mind that when you do talk to investors, or if you're just trying to get, if you're just talking to someone and you want to give them options, right? Like, oh, I'm not sure if I want to buy it for myself or if I want to invest. Well, here's an option. Another option they have is asset utilization. So 80%. What it does is it takes, let's say someone has $150,000 in the bank. They'll divide that by 12 if it's been holding for 12 months, and they'll use that amount as your income. So you don't have to have pay stubs. This is someone who's has a lot of net worth, has a lot of capital, and they want to buy using what they already have in the bank, and they use that to calculate your income. So I mean, if you're holding 200,000, if you're holding 150, you've been holding it for a while, you have income.
Question on the DSCR ratio. Is there a range, a floor and a ceiling that to qualify?
Can I jump
Jump
in?
in.
Alright, so basically, just look on the DSCR, there's many ways to get approved, okay? Because some DSCR require over one. In other words, they want it to be 1-to-1. The mortgage is $3,000, rentals have to cover $3,000, okay? Depending upon the lender and the down payment, I have programs where they go under one. So I have a lender that can go 50% under one. That's the max.
Wow.
And then I have another lender that will go no ratio, which means they don't care.
That's great.
They don't care. But again, it's because I'm a broker. I have the ability to go different prices, right? But normally on the DSCR, it's normally 1-to-1. There are some lenders that allow first-time investors for DSCR, okay? Also, first-time investors, first-time home buyers, people that don't have a home. Obviously, when we do this, all these little tricks represent risk, and everything is risk-based. So, if let's say I want to be under one, right? It might require me an additional down payment. Okay, if you are a first-time home buyer, right? You don't have any other property, but you want to buy an investment. Okay, well, that's considered more risk because a lot of people, the first thing they get rid of when they're in trouble is an investment property.
Right.
So they consider more risk.
True.
So it's different when you live in the house. You do whatever you can to keep the house. But when it's investment, cut your losses and goodbye. So therefore, it's going to be either more money, more down payment, so it's more skin on the game. So it's more difficult for them to get out of the deal.
Yeah. It's a very popular loan lately. A lot of my investor clients are going with DSCRs. They get them quick.
Yeah, that's what they want. They want to be efficiently. They want to close. They don't want to be in attorney review for a long time. They don't want to be waiting around for a mortgage.
Right.
Because at the end of the day, what do they want? They want the house. They don't want the mortgage. We just make it easy for them, right? So this is just two scenarios. This is if so. Let's say Maria is a self-employed cleaner who owns her own company. She's mostly paid in cash. She does not hold money in the bank and has one trade line over 2 years. Since you two are my audience, do you think she would go FHA, conventional, non-QM, or SOL, which is...
Shit out of luck.
Yeah.
I think she should out of luck.
Actually, can I jump in?
Jump in, yep.
Okay, so not necessarily that luck, okay? She's self-employed who owns a company, okay? So let's say she only has one trade line and she has 3 credit score, okay? Now is the time to have your client talking to us because now I can talk to the client and say, hey, you're self-employed, you're not showing that much. How about if I talk to your accountant and I help your accountant do an income tax that actually gets you qualified for a mortgage. You might end up paying some taxes, okay, but you can actually qualify for a mortgage. FHA will allow, okay, first-time home buyers with one trade line, okay, as long as you have three credit score coming from the repository, they will allow that. As long as they get an approved election, will go through. Even if you have no score, okay, I have banks that will do what's called manual underwriting, but that's more difficult though. That's the manual underwriting. It requires your ratios is maybe 33-40 45 the max. I gotta be a little bit more specific on ratio. There's two ratios, right? It's the front ratio, which means your income against your mortgage payment. That's what's called the front ratio. And then you have your income against your mortgage and all your debt. That's your back end ratio. That's how I determine the numbers. Okay, on a regular mortgage, the average ratio for them to get approved is, on a conventional, is 45-45. Okay, means 45 of your income toward the mortgage, and maybe 46 toward your mortgage and your debt. Okay, that's just for conventional. For FHA, I can push it up to 46.99 and 56.99, which means 46.99% of your income toward the mortgage, and 56.99 toward your mortgage and debt. That's an FHA. They're very lenient on that aspect, okay, but they're more restrictive on a appraisal and hazard the situation for the client, okay. Conventional, they're more lenient on appraisal, they're more strict on income, okay. Non-QM, they're more open, they're more lenient on the DTI, because on non-QM, I can go up to 50% of your income, okay, but no more, 50 cents. That means 50% of your front and 50% of your back, okay. But the difference with non-QM is I can document income with more than one way, which, like you said, I can do full doc, I can do bank statement, I can do P&L, I can do for people that have a lot of income, what's that?
Asset utilization.
Asset utilization, and the DSCR, which is mostly for investment, okay? But all the other ones you can do for first-time home buyer. So this one, it does have a possibility to get a mortgage, but they might end up paying a lot of money to the government, because, you know, self-employed people, they don't show a lot. But there's a possibility, you know. Or a lot of time what we do here at the brokerage is that we help people improve their credit. So if someone comes in with a one trade line, if they do everything that I ask them to do, you know, maybe in 6 months I can get them to have 3 trade lines, and then I can do many other different things for them. But we have the knowledge and we have the ability to help.
Next is Joe is a self-employed construction worker. Joe owns his own company, mostly gets paid in checks and online payments, let's say Venmo, Zelle. Joe has a one-time mortgage late, and he has over 3 trade lines. Do you think FHA, conventional, non-QM, SOL?
I'm gonna guess non-QM.
Yeah, me too.
Actually, that is correct. You can go non-QM with this guy, because non-QM allow for some lenders allow some mortgage late, okay? But you cannot discontinue the conventional, because I have, actually right now I have a deal where customer has 2 mortgage late in the last 12 months, okay? But it's still approved, the guy is still approved for a refinance, okay? Even though he had a mortgage late, okay? The difference is the 30 days late. You can still push some of it on a 30-day late, okay, but very unlikely it'll go on a 60 days late. And the farther out it goes, you have 30 days late, 60 days late, 90 days late. The longest I've seen is 60 days. 60 days is pushing it. Once you go 90 days late, you know, it's pretty much to put a stamp on your forehead that says rejected, you know, that's pretty much it. Yeah, it's a possibility, you know, but we have many ways and options to get deals done for you guys.
Great.
So this is some trivia if you were paying attention. So what does FHA stand for? Fair Housing Administration. What are 2 income calculations methods used in non-QM?
Bank statements and profits. And
P&L statement.
P&L statement.
What does DSCR stand for?
Debt something.
Debt service.
Coverage ratio.
Debt service coverage ratio.
One last slide. If there's, I have candy here, but if you want candy, I can throw it to you. So, true or false? Non-permanent residents qualify for FHA loans.
False.
False. Yep. as of last year, they made a statement, they no longer qualify.
What's that definition?
Um,
Non-permanent resident.
That's a good
Great question. Non-permanent resident means people that don't have permanent residence in the United States. In other words, I don't know if you hear the news about people that to get deported, they still have work permit.
Mm.
Okay, so the
Heard a
people
little
with
bit
work
about that.
permits are people that are considered non-permanent residents. Okay, so you have two types of the non-permanent resident. You have non-permanent resident that have work permits and non-permanent resident that don't have any paper.
Right.
Okay, people that have IT, which we can also do. I can also do people with tax ID, and I can do it with all different ways of documentation. I can do full doc, I can do bank statement, I can do P&L, if an investment, I can do DSCR. So if you right now are not taking advantage of the people that don't have paper, right, to buy a home, okay, you're losing a lot. Okay, well, a little bit more difficult now, but the year before was better because you know people weren't afraid as concerned as they are now. Okay, but still there's still some in the market. So even if you're able to close 5 of those deals a year, there's 5 deals you didn't have. Okay, obviously I don't want you to go and look for some guy that works at the car wash, right? Cleaning the cars. That guy isn't gonna have the down payment requirements, usually 20%. But if you look for like self-employed individual, maybe landscaper, they own their own companies, those guys, you can bring that knowledge to them and say, hey, listen, you can actually buy a home, okay? They might actually be interested in buying a home. So it has to be like a self-employed, and if it isn't self-employed, it has to be someone who makes decent money to qualify.
And last, true or false, conventional appraisals are more strict than FHA.
False.
False.
Actually, FHA appraisal. You are correct. I'm sorry. I read the question correctly. It's false. Conventional are more lenient than FHA. FHA, the main thing you have to look when you take your client and you know it's pre-approved in FHA, make sure that the house will actually qualify for an FHA appraisal. Okay, FHA appraisal, they look for peel and paint. They look for anything that could be a hazard to your client. So let's say I come through the door and let's say this carpet has a humongous hole here, right? It's ripped. Okay, well there's a chain that I'm walking and I trip over that. The appraiser will say, okay, well that carpet needs to be replaced or removed.
Right.
If you have anything restriction on the window, the appraiser will say, well, you can't have restriction because in the event of a fire, you can't get out of the house. So you need to get rid of that stuff.
Right.
All right, so a humongous hole coming into the driveway, where someone could trip over and break their neck. All those things they'll call it out. As a conventional, they're ripping on the carpet, they don't care. I had instances where an FHA will complain that the house is too dirty. I had one guy that said the house is too dirty. I think, well.
And then you have to send them out again, or you have to show pictures. So this is again, it's time that.
So it's important for you to be able to pick these things out, okay, as a realtor, because it'll give knowledge to you and it'll give credibility. So when you're out there with your client, you say, hey, listen, this house, they might ask for these things, okay? We can put the offer, the seller will have to fix those things, but if he doesn't, you gotta think about, am I willing to put the money into it or not, right? If the seller isn't willing to do it, then you have to decide, okay, well, do I spend $300 to get rid of that thing? And maybe I can get the house, maybe the guy will give me a little discount, so you have to be able to negotiate these things. And this is where we are an essential part of your game, because we can tell you these things, right? This way now you have something to go back to the seller, okay, the mortgage is approved, okay, let's talk about what we're gonna do with this appraisal thing, okay?
So this is open to questions. If you had any scenarios, I know you were talking about one client. If you had anything else that.
Well, I do. I work with many Section 8 people, and and, would love to encourage them to maybe buy a house, so how might that work?
Alright, section 8, the best thing to do people like that is obviously a lot of them might don't have down payment, right?
Right,
Alright, so we can do down payment assistance. But remember, anything that has to do with assistance require income. In
right,
other words, assistance means that someone is putting out money for that.
right,
Whether it's the government, whether it's a private institution, alright? But it means they have to take a government program.
right,
So, let's say you're the government, right? And they come to you for money, right? But I don't wanna pay any taxes, then, you can't lend them money. So that's the downside about a down payment assistance, because the only way you're gonna get down payment assistance is by being able to qualify to that particular mortgage through regular income. Okay, you're not gonna get any other but regular income. I have one lender or two that non-QM, they have some sort of this kind of a down payment assistance but the client still has to come up with sometimes 10%, sometimes 5%.
okay,
So they put up the difference to make the 20%. But it's only a few, and they come and they get rid of them, So it depends on the situation. We have to look at the scenario in order to make a decision what's the best thing for the client. Any other questions?
Yeah, I mean, the best thing I could say is just give us a shot. If they're really willing to do it, a lot of people, they're really grateful once we get them the loan, right? Because it's a challenge for them and it's a challenge for us. But
Right.
at the end of the day, they get whatever they were dreaming of, their house. So just if you phrase it like that, let's just give it a shot.
yeah, I mean, that's all, I'm always encouraging us just to talk,
Yeah,
see what I might be able to, what kind of a plan I can make to possibly own a house.
and just tell them that there's many ways to cut it. It's not just about what your paycheck says.
Right.
Obviously, it's what you pay, all your paychecks, right? What you do every day, what you have in the bank, how much you're saving, and then if it's not enough, then we'll help them get there.
Right.
It's like free advice, free financial
Yeah.
advice, organizational advice, what to do, how to clean up their credit.
Right.
And, so
Exactly.
they'll guide them right through it.
And we're sticking with them for however long till we close. So we're putting our investment of our time, if that makes sense. So
Mhm.
we want them to close just as much as you do.
Just to recap, just want to make sure that you have no question. I mean, can you differentiate between conventional and FHA, non-QM, regular mortgage? I mean, if you were to speak to
Yeah.
clients, I mean, you don't have to be an expert on the matter, but you should be able to
Right.
have a conversation about it. Same
Yeah.
thing with me, I don't need to be an expert on real estate, but I need to know the matter, because if I don't know it, it's very hard for me to help you as
Right.
a realtor to grow your business. Same thing, when it comes to clients, I gotta know real estate, accounting, finances, then I gotta be a detective, but, that's just the name of the game. Is there anything else that you'd like to talk about?
The non-QM, that was new, I hadn't heard of that, and the DSCR was also new to me.
Okay.
But I think, explain the difference between conventional FHA. Some of the deals I did in the past was, my broker was like very concerned if somebody was FHA, because they thought that was, people aren't, sellers aren't gonna accept an offer from somebody who's got a FHA, which, I'm not sure why that is. I sort of understand it, but,
But that's where you need to have the knowledge when you go into a property and look at our house, right? And look at their house and say, oh, this house will go as an FHI. That's not a problem.
I mean, I didn't know, like, for example, that the issues with the carpeting and stuff like that for FHA, that's new to me.
Yeah, so all that stuff is very important, because it gives you knowledge and it gives you credibility with a client, because now you're calling it before you even start. The biggest issue with 3 and 4 families on an FHA is called self-sufficiency test. So basically, self-sufficiency test means that the house itself has to qualify above the client. In other words, the client qualifies for income, right?
Right.
He goes through, no problem, right? But if the house doesn't qualify, even though the guy qualified for income, he can't get the house. I had a scenario where By me qualifying the house means the house has to bring enough income to cover the mortgage.
Right.
That's called self-sufficiency. So I had a guy who's buying in close to New York. Obviously, the taxes out there are very expensive, right? So self-sufficiency didn't work. So what do I do? What do I do? You know, I need to help the agent close the deal, right? And obviously, I want to close for us. So I said, okay, the only way I can make it work is if I get some sort of a seller concession. So I said to the seller, listen, it doesn't matter if you accept, it doesn't accept. This appraisal will be attached to this property for 6 months. So whoever comes next, okay, if you want to sell the house, they're gonna have to go FHA or conventional, okay? If they go conventional, then you're good, no problem.
Right.
But conventional is more strict. You require 45% of the person's income plus 6 months reserve. Okay, most of the monthly payments on a house are $800,000. Okay, it's gonna be in the vicinity of $6 grand times 6. That's $20,000 additional for the client. Plus your down payment on a 3-family or 4-family at $800,000 is gonna be at least minimum 5%. So that's a big chunk of money, right? So 800,000, 5% is what, 20, or 40,000, right? 40,000. Then you got your closing cost, which is another, depending upon taxes, I would say 20,000, right? So 40, 60. And then you have another 20 for your reserve. Now you're into the 80,000. I mean, think about this. How many people have 80,000 in the bank to make it work? Not everybody. I mean, most of my clients don't have 90,000, and the people that buy 3 or 4 families are not people that. If you're an investment, sure, they have the money. But if you're a regular person, you don't necessarily have the money. You might have 60,000, but you might lose the reserve. So that's what I went back to the client and said, you're gonna have to either give us the concession so I can make the deal work, or kill it. So the guy gave us 6%. With that 6%, I was able to bring the guy down to like 4.25% rate, and now I met the self-sufficiency test, and the guy closed with no problem. And so those are the things that we do. We have the knowledge and the capability to do all this stuff.
So keep that in mind. Sorry to cut you off. Just keep that in mind for your sellers too. The FHA, you see it, you come in, you're gonna post this on a listing, be like, hey, like, I need this fixed, right? Or you should fix this, otherwise you're kind of limiting your buyers.
Right.
And 2, once you get into contract, the seller wants to sell quickly as well. They don't want to wait and try again. So now you have another reason. So, hey, this will work if you get this FHA approved. If you do these little things, then you'll get it sold faster, and you have a bigger pool of people.
Right.
That's great. So, all right. So, these are presentation. Are you done with this?
Oh yeah, so just my
So,
contact
this is the
information.
contact person.
So yeah, 973-8895. Just in case you ever have any questions, you need to get to me. We're working on a loan together. So next.
And, all right, so we have next Sergio, title company. He's gonna talk about what's required on a real estate transaction about title and what is important for title. Even if you buy cash, okay, it's important for you to have title. So with that in mind, I'll give you the Sergio, and that's create a credential.
Thank you. Dennis, you're a fairly new realtor?
Douglas?
I'm sorry.
Yes, I was a teacher for 25 years, retired 3 years ago, and
Okay.
of course, everything stopped in the market, so.
Well, that's good though, because I think in real estate, a mortgage broker, attorney, realtor, you're educating your client.
Yes, very much,
And
very
that's
much
the
so.
philosophy I look at it. In everything I do. It's you gotta educate. So whether I end up being used or not, my job is to inform people.
I agree, same
So,
here.
that being said, title insurance, do you know what it is?
So when you're, gonna close on a place, you do a title search and make sure that the property is owned by the person that says they own it.
Mm-hmm.
And then basically, you know, title insurance protects you against any issues that might pop up if it's not a clear.
Yeah, yeah. Well, it's an actual insurance policy given to the owner and to the lender. More likely than not, there's gonna be a lender involved. Whether it be a refinance, commercial purchase, or a residential purchase. And we go back 60 years on a purchase to ensure that the chain of title is intact. So the seller actually owns the property and the chain is fully connected, going back 60 years. And we see what other liens are against the property. And we prepare a title commitment showing everything that needs to be clear. Now, generally it's up to the seller to clear the title, but there are certain issues where they'll need assistance. That's where we're supposed to step in. Some title companies just say, hey, fix it. But it's good to have experience and be helpful and suggest how to fix it. So I tend to be proactive with that. Is it mandatory? Title insurance?
Title insurance? No.
No, it's not. If you're buying cash, you don't have to get it. You'd be foolish though to do it. I mean, I strongly urge everybody to do it because when you go to sell the property, that buyer more than likely is going to do it and has to go back 60 years. And now it's incumbent upon the seller to clear everything that they should have cleared already.
Right.
And if something was missed or there's something big there, they are basically buying it subject to. So I encourage everyone to do that. Now, that being said, do you know who orders the title insurance?
Do I know who orders the title
Yeah.
insurance?
Who picks the company, who orders it, when it's ordered?
I would guess the buyer,
Yeah, the buyer does, but who on behalf of the buyer?
the agent.
Yeah, usually it's the attorney.
Okay.
So buyer pays for, in New Jersey,
Right.
buyer pays for title insurance.
Can I cut you off?
Yeah.
But also, if you read your contract, okay, your real estate contract, you can add the title company in there.
Well,
Yes.
I'm getting to that.
From start.
Yes, that I knew, so that's why I was thinking it was.
Sorry,
it
I
was the
didn't
buyer.
mean to cut
No. Usually historically it's the attorney. I used to practice, and I had a real estate practice 15 years ago. Burnt out, I hated it. Back then, the attorney controlled which title company to use and was the settlement agent. Now, there's
Right.
title insurance. Title insurance company actually issues the policy. The settlement agent handles the money and actually distributes and coordinates the closing.
Right.
More often than not, 98% of the time, 99% of the time, it's the same entity that does both. Okay, 1 out of 100, you'll get a different settlement agent. Nowadays, attorneys do very little. They'll do attorney review, negotiate the home inspection, make sure the mortgage commitment is given. They're not settlement agents anymore. A lot of times they don't go to the closings. Right? They'll have my notary will go and sign off and explain everything. So the power to choose has shifted a little bit. A lot of times the mortgage company will do it. There's a relationship with the buyer and they'll recommend someone. More often than not now is the realtor that selects the attorney and recommends an attorney. That realtor will now say, well, I like using so and so company. Please use them.
Right.
You could leverage that to pick and choose the company. Sometimes the buyer will have the relationship already established, regardless of who you recommend.
Right.
They are entitled to do that as well. So I encourage you, whether it's All Pro Title, which is my company, or any other company, choose who you like to work with and make sure that they are overseeing the transaction properly. The title insurance company will do the search, but then has to coordinate everything.
Right.
So they've got to coordinate with the attorneys, make sure the title is cleared and everything's been submitted for review. The realtors, make sure the commission statements are given, and with the lender to make sure the money's going to be there. So everything's got to run through us, and we got to coordinate and making sure it runs smoothly. That being said, it's helpful to use a title insurance company that's familiar with these transactions. whether it be a residential purchase, whether it be non-QM, whether you're dealing with a real estate investment, whether it's a commercial deal, or refinance of a commercial or prospective residential property. Because it's helpful to know and understand the issues that are happening, whether there are inspection issues, a rug has to be done for an FHA property, and we know it's gonna take a little bit longer. It's important to also offer suggestions. I like to know what the issues are as well, because that maybe there's something I could help out with. You know, suggest a solution, coordinate something at closing, work out credit, whatever it is. With my experience as a former attorney, I've underwritten commercial loans. I've managed real estate properties for clients. I've run businesses. I've seen it all from every angle. So I understand what the proper and efficient way the closing should go. And if I see any issues, I like to point them out and say that could be a problem here, or there could be a problem here, look at it now so it's not an issue later. It's helpful to do that. I'm not sure how many title companies have that luxury to do that. We certainly do. That being said, I like to get a leg up on transactions. So if you're my client and we work with each other regularly, I'll order title right away. As soon as the contract's signed, if you're telling me this looks good, a turn review will go quickly, I'll order it right away. Title usually takes 3 to 5 days to do, for the most part. It's a function of the buyer's name. We search by name. So if the name is John Smith or Jose Rodriguez, there are thousands of them. So we search my name, look at the deed, see if it matches the property on the contract. If not, we go to the next one. Jose Rodriguez, next one. John Smith, next one. Until we find the property. And then we go back 60 years. Okay, so I like to start right away without a penalty to your client, or if it's a mortgage company, to the lender. Because I know you'll send me some more work. I'll eat the cost of that. Normally though, attorneys will like to wait till the contingencies are met.
Right.
Home inspection's done, mortgage commitment is satisfied. Clients will then tell me, listen, Sergio, I'm not sure about this mortgage, you wanna wait? Then I'll just open a file, I'll receive the EMD, and I'll wait. I'll wait for further instruction. Or if there's this inspection issue, there's a big problem, a septic tank or some oil tank or something, then I'll wait. But otherwise, I go right away. Because that shouldn't hold anything up. And everybody wants to get a picture of what to look at, what's going on, what are the title issues. Sellers wanna know what liens. I had a lady call me this morning, she called me last week and called me again this morning. For me to prepare a statement, an estimate of what her cash to close, her net proceeds will be. I haven't even gotten the order yet. She was told they were gonna use our company, Pro Title. She called last week, called this week. No one's ordered it yet. I mean, she doesn't even know who the realtor is, who the attorney's supposed to be, but apparently their clients have buying. I'm like, well, I wish I could make a call for you, but once it started, I'll gladly help. Those are little things that, our job is to be helpful. Everybody wants to close, everybody wants to house, like Anthony said. And this should be the happiest experience, whether you're an investor or a first-time home buyer of your life. It's an important, big, huge investment. My job is to make sure it goes through quickly, smoothly, without hassle, without headache. You shouldn't be calling me. A simple email should let me know what's going on. The mortgage company shouldn't be calling me for a lot of things. It should be done, quick email, settle this, move to closing, and you guys can move on to more pressing business. Your next client, your next property, your next transaction. So that's how we like to handle a deal. That being said, problems arise. Nothing goes smoothly. There's always some sort of issue, whether it be some sort of latent title issue, an inspection issue, something pops up on a credit report that's unexpected, and they went shopping too early, and
Right.
So,
Yeah.
Sergio,
Yeah.
what's your biggest hurdle when it comes to title? Would you mind explaining to us a little bit what's the difference between lender title insurance and the borrower titles insurance,
Okay.
you know? So this way,
There's really no difference, okay? So if you're buying cash, you're getting an owner's policy. The premium is based upon the price of the property, plus all the costs of title, all the searches and everything else. It's included, that's the final invoice that gets paid at closing. A lender's policy, so, on most transactions, the loan amount is less than the property, than the price of the property. So the policy will be based on the higher of the two. Okay, it's gonna be based on the price. The lender will then just get for an extra $25, $35, they get an extra policy for the lender. Okay? We have to make sure title's gonna be clean for both, otherwise the lender's not gonna lend a cent. Okay? The lender wants to make sure there are no judgments against the buyer. Okay? Legally, title-wise, we don't care. Most of these mortgages where they're lenders, it's a purchase money mortgage, which means you're using the loan to buy the property that is subject to the contract. When that happens, the buyer could have $1 million worth of judgments in his name, could be a complete deadbeat. Those judgments do not attach till after this closing is finalized. So they're buying the property free and clear. The mortgage company is in first position against the property. Then come all the judgments, even though these judgments pre-exist. In terms of priority, normally first in time takes first position against the property. That's the priority of getting paid out when the property's sold. Normally judgments that come before a mortgage would be ahead. Not on a purchase money mortgage, they fall behind. So we don't care. But now once you buy and you go to refinance, now those judgments are first in time. They're a problem, they'd have to be paid off on a refinance. Okay, so on a purchase, we don't care. The lender will ask us if the judgments are against them. We say, legally we don't, but we'll ask the lawyer to review it with them, because we don't really know the buyers. We don't usually get a 1003 or social security numbers to clear them. We ask them to do it, they clear it. It's very rarely a problem. If there's a judgment or something, it gets paid at closing. We also check to see seller's judgments, tax liens, any municipality services, whether some, depending on the town, it could be a sewer or a water account or a solid waste account or garbage collection. Whatever is run by the municipality is lienable, which means it could be collected against the property. That takes super priority. Municipalities, governments jump up ahead of everyone, regardless of when they filed. So they get paid off first. So lenders obviously want to make sure those get paid at closing. Obviously we check for mortgages, federal tax liens come up, they get recorded at the county level. Anything that pops up that may be similar, we ask them to clear. And we don't close unless we clear everything. And that's where we try to be helpful. Certain issues arise that complicate things on closings. Estate issues. A lot of estates, you're gonna find clients that are selling, they inherit a property, just wanna dump it, move on, and get rid of it. Those require additional searches with the surrogate court to make sure the person that is administrating the estate or is the executor of the estate is in fact so authorized. We gotta make sure that in fact the person is dead. Get the death certificate through the surrogate court. Gotta make sure if there's a will, get a copy of it. That's also done through the court. That also triggers a tax complication, right? There's estate tax, which is the deceased, the tax on the assets of the deceased. And then there's an inheritance tax, which is based on the people that are getting a share, on the heirs, okay? The estate tax is basically a non-issue. The limits are so high that they're rarely implicated. And now there aren't even any anymore on the state level. And the federal limit is something absurd. Inheritance tax depends on who's the heir. Certain heirs do not have to pay taxes. A spouse, children, okay, parents, no taxes. I'm sorry, spouse and children, no tax. Anybody else on the family tree, up or down, pays. And then we calculate the amount based upon the value of the assets that they presented to the surrogate. We ask for a copy of that. They fill out our own questionnaire. It's a simple questionnaire. And we hold that at escrow. And we make sure that gets paid after closing. They have to file a tax return with the state. We pay that tax liability for them, and then we refund the balance. Another issue you'll see are tax liens, tax sale certificates. If you don't know what that is, basically the city of the municipality is asking people to pay, other people to pay their taxes that are due. It's a loan, right? In return for up to 18% interest in New Jersey. So if I owe taxes to Anthony Township, right? They want their money to run the town. So you can come and say, right, it's $5,000, you pay Anthony Township $5,000, they promise you 18%. If that was the winning bid. Okay. Anything that is a formal tax sale certificate has to be paid. You gotta pay off, it's gotta be paid a certified check. However, that could be foreclosed upon. The tax lien holder in New Jersey has to wait 2 years to start a foreclosure on a tax sale certificate. But once they do, that complicates the closing process. The homeowner always has the right to redeem the property and pay off the tax bill. However, on a sale, usually they're in this predicament because they don't have the money, they fell behind, there's an illness, something happened, they defaulted on their loan, what have you. They don't have that money. So it's coming from the sale of the property. I just can't issue a check for that. To protect the homeowner, the state legislature instituted laws that require now the tax lien holder to approve the transaction. And they have to certify to me as the title company that they will discharge the foreclosure, the list pendants that's filed when they file this for, it's a notice, an official notice of a legal action at the county. And they'll discharge the tax sale certificate upon closing.
Can I interrupt you on that
Yeah.
real quick?
Mm-hmm.
And that is very important why you need to have title companies as your partners. Because think about what Jussi said to you. Let's say you have a listing client, they're going through the sale, right? You're thinking that you're gonna get the listing and the sale, right? Just find out that the guy has list pending foreclosure from a private investor, right? Okay? So just the fact that he has a list pending is equal as foreclosure, okay? So when this guy that is selling the property comes back to us and say, hey, I'm ready to buy the house, I'm gonna say, rejected, you have a foreclosure, right? So now with him, when you have a title company in your team, now you realize this stuff. Now you can go back to the guy, hey dude, you have a lease pending with this investor. It's a good chance you're not gonna get another property unless we fix this thing. So now you know what's going on,
Yeah.
right? If you don't have your team line up, like title company, mortgage company, insurance agents, attorney, okay, you come to know this too late in the game, okay? So here you go, you're gonna find these out a week before closing, and the guy's gonna be extremely pissed off at you, I'm sorry my French, extremely mad at you, because you let him continue the transaction, and he's not gonna be able to get another house to live in. So he goes to the closing, and at this point, he's gonna get forced to close because the other guy is moving to the house. So now the guy is gonna end up selling the house and not a house to be able to buy. So you have to do what's right for the client, okay? And just to protect them, you need to have a team lined up. And this is where I profess to every real estate agent and partner that I have. Create a team, let's be part of a big team so we can help our client.
Yeah.
Sorry, I didn't mean to.
No, it's okay, thank you. Normally, an attorney, buyer's attorney, sales attorney is responsible for doing it. I don't even wait anymore, because a lot of times they don't even realize that the law, if they're not really dedicated to real estate law, they don't know. So I do it and I make sure I clear it, because ultimately I'm insuring the transaction. So I get the payoff from the municipality, I submit it to the attorney, I copy everybody else, I make sure that they approve it, and I get it in writing, that they're gonna close and discharge everything, and then that way I'm fine for underwriting purposes when we move forward. So that's also a challenge that will drag out a closing. Any other foreclosure, pending foreclosure, whether it be tax sale cert or regular mortgage foreclosure, if there's a short sale or something like that, you have to make sure that you review seller's judgments over debt. Maybe pull a soft pull of the credit, Credit Karma or something, just to see what's there. Ask them about any mortgages, lines of credit, medical bills, anything that could be a possibility of an issue, because that's gonna have to be paid at closing. I'll do a preliminary tax search for you, the preliminary judgment search. I'll do a current owner search for you just to see what's there. If you have a listing where the equity might not be there or they're upside down, so that you know exactly what the numbers are, because then I'll help you prepare a HUD if you're the listing agent. Even though I'm gonna be the buyer's agent, hopefully. Or if there is a contract already for sale, it's already done. I'm preparing HUDs so that the lender approves it anyway. And it's good to be accurate so that no one feels shortchanged at the end, because once the lender approves this short sale, you're stuck with the numbers. And they may not even care what the amount is. They may compromise your commission, that attorney fee, this or that. So take it or leave it. But I like to have it all there so that everybody understands what the actual numbers are. Okay. So there are quite a few issues that are challenging. You may find yourself working with real estate investors. Some title companies don't like working with real estate investors because they do things creatively. They'll enter into a contract and assign it to someone else and make an assignment fee. It's a pretty simple transaction. They'll buy property subject to the mortgage and pay the seller, agree to pay the seller down the line when they resell the property. A ton of million of those. Work with a ton of real estate investors. I was an attorney, I represented them. I understand how to do these things. Whether it be a sophisticated commercial deal, whether you're buying apartment buildings of more than 4 units, that's technically commercial. I finance those for people. I have underwritten those loans. I understand how the loans work, what they need to see. They make you jump through hoops. I understand what these banks will require, whether it be a hard money lender or a small commercial bank like Spencer Savings or Provident or whoever you choose. I know what they need, so I get them what they need right away. It's done. It's helpful to know these things. A lot of title companies just do regular residential purchases and have no clue how to manage a commercial transaction, something that's non-traditional. It's helpful to have that experience. Nothing amazes me. The title part is still the same. The liens are there, we have to check. But in terms of the management of the transaction to get you to closing smoothly, that's where it helps to have the knowledge and the information. We do a good job doing that. We've been around now, wow, I think 26 years? No, 23. Our owner is Bart Oates, a former New York Giant football player. He was the center for Bill Parcells' Super Bowl winning teams. That's why we are all pro, because that's what all-star players, are called in football.
Right.
So I've been with the company 5 years. In a roundabout fashion, wound up in title, because they were friends of mine. I used to send them my title work when I was placing and brokering commercial loans and consulting for people. And somehow during COVID, I ended up unemployed. It's a funny story. I'll get to it after, once we're off camera. I'll share that story. But I saw that while I was during COVID, I saw they were looking for people because their staff got demolished by COVID. And they were looking for help. I said, I'm coming. And I've been managing the business ever since, and we're growing, doing phenomenally. So I take pride in what I do, and I enjoy what I do. I literally have fun. Every day is different, every transaction is different, and I enjoy helping people, explaining to them how things should be done. And also, I like people to experience success. I want you to make money. I want the mortgage company to make money. I want the client to be happy. I want that client to come back and then buy an investment property for you, right? Because that's a great source of building wealth, right? So it pleases me to the nth degree to see that. And, I think it's important to work with people that like what they do. Not some just curmudgeon that sits behind a desk and just complains that all these things have to be done, but then doesn't really help to lift a finger to guide you how to do it. Yeah, I don't think that's acceptable.
Sergio, do you want to field some questions?
Yeah, please.
Do you have any questions?
I don't really have any questions.
Okay.
I came in a little bit late. Sergio,
Yeah.
Kevin Kwan.
Let's go.
Question, how long does it generally take to get the title from start to finish once it's ordered? Like for like a residential,
Yeah. It's generally 3 to 5 days.
3 to 5 days?
Yeah, that's why it's important when it's ordered,
Okay.
right? Traditionally, it's ordered, attorneys like to order it once all the contingencies have been met. The commitment's in, home inspection issues are resolved. But now, closings are trying to be done in 30 days, 45 days.
Mm-hmm.
That might leave you with a week to go before the estimated closing date, and you're getting pressure from the seller who is looking to move out, the buyer looking to move from his apartment, coordinate a move as well. That makes it tight. If there's a title issue that pops up, now everything's delayed.
Okay.
That's why for clients of mine, I like to order right away.
Okay.
Once it's under contract, you're done, unless you tell me otherwise. I order right away. And we know what's going on. There's plenty of time to deal with it.
Okay.
Sergio, one more question.
Mhm.
The title, right? So you have the lender title policy and the borrower's title policy. Okay. These are insurance policies.
Yes.
Right? Okay. So explain to our audience and the people that are here what these policy cover.
Yes. So now that's important. If we miss anything on the title search, let's say Anthony had a mortgage against the property for $50,000. It was recorded. We missed it somehow. The searcher just didn't see it. It wasn't indexed properly or something with the county. Somehow we missed it. Then Anthony goes to the buyer's door after the closing, knocks on and says, I had a mortgage against this property. You owe me now $50,000. We pay it.
Okay.
That's what the policy is. We got to make sure.
What
everything's
about a water and sewer? Is that covered?
That's, if it's municipal,
Mm-hmm.
it's lienable, we have to ensure that it gets paid. Same as an HOA. Right? Condos are the most affordable properties now lately, very popular. Right? People are being priced out of the market, so they're turning to condos. We have to make sure any HOA fees are paid and collected at closing. Any liens are paid. That lien also takes super priority, like a municipal lien. So lenders absolutely have to see that gets paid.
So one more question, Sergio. So it seems to me that when it comes to taxes, condo debt,
Mm-hmm.
okay, even I think water and sewer, that supersedes the mortgage,
Yes.
right? So basically, when I say supersede, would you mind explain to, the position of these liens when it comes to mortgage and why it's so important to have the lender policy and the borrower policy, and the event, because we don't know if this ever happened. It's very common to have water and sewer sometimes come back, and maybe the meter was wrong or whatever,
Yeah.
So it's important for you to explain this to the audience and the realtors that are here.
Yes, those liens, when we talk about priority, we talk about it in terms of who's in line first to collect against the property when the property's sold or it's going to be liquidated. That's the priority. HOAs, homeowners associations, municipalities take super priority and jump ahead of any existing mortgage. Mortgage companies want to make sure those are always paid. That's why they collect the escrows for the taxes and the property insurance to protect themselves. It's not as a favor to the borrower, it's to protect them. Okay, sometimes, rarely, but they should include the HOA in there too, but they don't. That's incredibly important because if something is missed or comes back after the closing, they can file a claim against our company. We're going to be responsible. But that being said, We ordered an HOA payoff ahead of time before closing, as early as possible. We make sure we have those amounts up to date. Any formal lien or lawsuit by an HOA will show up on the title search. We make sure that gets paid. Sometimes we'll have to negotiate that with the HOA if need be. Water, sewer, things like that, we hold an escrow for a final bill. Okay, sometimes though, these bills are estimated. They don't get an actual reading. And if that happens and it's more than the amount I'm holding, the seller's responsible as per the contract. So they have to pay. Okay, sometimes you might have to chase them down, but they are on the hook. They're not alleviated by that. In fact, they should have had more responsibility and made sure that the readings were actually done. So they're contractually bound to pay any shortfall after that.
After the closing.
After the closing. Yeah.
Interesting.
Yeah, if there's a mistake on the closing, sometimes a number's wrong on the HUD, things happen. Mistakes aren't absolved, you know, they have to be corrected, and the party that is, you know, it's to their detriment that the mistake happened, will have to pay. They're not obligated. That is language in every standard real estate contract.
One more question regarding this thing. To me, it's important because I feel that a lot of people don't know why they're paying for a title insurance, right? So I really want you to explain this up, because as a buyer, we go, title insurance, what's that for? You know, what am I make me spend $4,000 on that thing?
True.
But when it comes to borrower's title policy, right? We already spoke about the lender policy, you know, that they cover the water, sewer, and all that stuff. On the borrower policy, okay, what does it cover? Does it cover like if they miss a garnishment? Okay, is that the purpose of the borrower policy?
No.
So what's the
borrower's policy? They all cover the same.
Okay, so what's the purpose? Explain to us what's the purpose of the borrower's policy.
The borrower's policy protects the owner, again, protecting it for something that was missed. And it lasts the length that the owner is on title. So if he owns the property 25 years, that policy is in effect for 25 years. If someone shows up in year 10 and says, I was owed something that should have been paid at the closing, claim can be made.
Really?
Okay. I'm not sure it'll be successful, but it can be made. It would be a problem. It's still a problem because we insured it.
Okay.
Okay. The lender's policy, again, where guaranteed title is clear, they can file a claim to protect their interests in their position. If they're not in first position, and it's because of something that pops up after the fact, they file a claim. Okay, the lender's policy remains in effect and only protects the lender as long as their loan is still open. Okay, so once a refinance happens, we're only going to issue a new lender's policy to that new lender. The owner's policy is unaffected. Remains in effect.
Oh, so when someone purchases a house, right, and then they refinance, okay, that lender policy from the original title company protects them?
No.
No?
That lender's policy?
No, I'm saying the borrowers.
Yeah,
the borrower.
because they still own the property.
They
Still in effect.
Okay, but
100%.
it'll protect up to the date that they purchase or beyond? Oh, it has to be
Up to the date of the purchase.
After the date of purchase, okay.
Yes.
Anything beyond the purchase forward, it belongs
It's going to
them.
be covered now by the lender's policy and the lender's search
Okay,
to make sure title's clear. That
Okay.
they didn't incur any new debt since that purchase.
perfect. Thank you very much, Sergio. I don't know if you have anything else to add?
Yeah, I'm always available for questions, emails, always.
Give us your contact information because we didn't
I
put
didn't
it on.
on the screen, no.
So just put it out there so people know how to contact you.
Yes, it's All Pro Title. My phone number is 973-292-1212. My email is my first name, Sergio, Sergio, at all-protitle.com.
Right, so everybody,
Thank
in
you.
case everybody doesn't have it, you know, I have it right here, okay? That's Oprah title. All right, Sergio, thank you very much
Thank
for
you
your
for having me.
presentation. I hope
My
this,
pleasure.
something.
I hope everybody benefited.
Thank you, Sergio.
Thank you.
All right, Sergio, thank you.
Go Giants.
Thank you. Thank you very much for coming along. Thank you very much for staying on the podcast. It's It is very important to me to stress out that the importance to have a relationship build up in the real estate transaction, because this is what's gonna make the deal go smoother, less trouble, and it's gonna create excitement for your next purchase, okay? Because if you make it easy for clients to be able to buy, they'll be more likely to refer to you, okay? Here at American National Mortgage, we have a whole team set up for you that we can work with you, okay? We also have relationships with insurance companies, title companies, attorneys. So with that in mind, I'd like to present you another partner, which is from an insurance company. We'll talk to you a little bit about insurance, okay? His name is Kevin Kwan.
It's only be a couple minutes. Thank you very much for the introduction. I'm not sure if we have enough food here for everyone. We heard about title insurance earlier today, and I just want to give a brief description of homeowners insurance and how it could relate to the home purchase. As you go through your home purchasing process, it's always recommended to get a quote sooner than later, because some of the information that might be there might be able to help you and assist you when you go towards the closing table. When you do quotes on the home, you know, there might appear some claims from the prior years. Some of those claims could be water related, could be wind related, and as someone who will be purchasing that house, you know, it's something that they should be notified of and be made aware of, because that's something that you want to make sure that your buyer has that repaired before they come in. Some issues that you'll run into in North Jersey: oil tanks, you know, above ground, underground. That's something that Quan Agency, we handle here. We can help you ensure that, as well as provide oil tank liability. So if there's any kind of leakage, the insurance company will pay for the remediation and for the repair of that. Flood insurance is another issue that you see as you go farther down south. Quan Agency has private insurance companies and the FEMA as well to help your clients obtain that insurance. Flood insurance is very hectic, but we have options for your clients. And some other things that come to mind: dogs. You know, if your clients have dogs, believe it or not, insurance companies are really, really narrowing down on that. If you have a pit bull, a Rottweiler, wolf hybrid, you know, these are some of the names and breeds that they are looking to exclude coverage and will not provide coverage for you. And other than that, there's just a handful of other items that insurance companies are looking for. Roofs, of course, things that are falling apart. Lately, they've been looking for roofs that are newer than 15 years. And so, you know, that's another issue that you'll encounter as you go through, because I mean, nowadays the houses are built here in New Jersey from like anywhere from 1880 to like 1950, 1970s, and the roofs are usually around like 20 to 30 to 15 years old. So if you do encounter that, you know, that's another way that we can help you out. I think at the end of the day, though, the important aspect of this, the one takeaway that I would want to just really emphasize, is that there's a lot of hands in the pot here. You know, you have the title agent, the realtor, you have the real estate attorney, the mortgage loan officer, the homeowner's insurance agent, and it's very important, as Carlos Pops says, that you need to have a team, because you don't want to go there and get to the closing table and then find out that there's an issue, right? You want to have those issues addressed and voiced weeks before that, so that you have a plan. And the worst position that you could be in is, you know, back against the wall, you get a problem, and then you don't have a solution to them. Really, I think the biggest value that we have here to provide to our realtors, to our team, is that we can address those issues as soon as we were brought into the game. And that way we can provide solutions to you guys, so that, you know, we have steps to move forward for that. Everyone wants to have their client in the house. Everyone wants them to have a good experience. And, you know, if you have a good team, you have good education behind you, we can definitely do that. And that's pretty much all I have.
Can I ask you a question, Kevin? Just to tie it up, you to title, right? He insures condos for the HOA, things like that, right? Tell us a little bit about that one client that the HOA got sued and how you were able to help them through the insurance, and why it's so important to have a team tied up to the real estate transactions, so things that happen afterwards, okay, they can always come back and thank you for what you've done.
Great point. So to emphasize on that, the insurance agent, a good insurance agent will have your client for, presumably for the rest of their life if they do their job right. And we are always able to help them at the beginning, the middle, and the end. And to the example that Pops brought up was one of our clients. He purchased a condo many years ago, and the condo went through a loss assessment because there was like a lawsuit that someone had slipped and fell or something to do with the pool, and everyone was assessed a certain amount related to that. There's a coverage, an endorsement that you can add on to your homeowner's insurance or your condo insurance policy that will cover that. So that way, that person, your client, that homeowner, that doesn't have to pay that out. I think they were assessed around like
It was like $3,000 they had to
$3,000
pay.
or $4,000.
It was a huge amount of money.
And that client paid $0. Farmers insurance paid that out for him. So, it's those small things, and that endorsement costs like $10. And let me tell you, he's still with us right now. Big Chicago Bears fan, Mr. Pressman, if you're listening, I hope you're doing well.
Thank you very much, Kevin. Would you mind giving your contact information in case someone needs to, get a quote or whatever they need?
Sure. Kevin Kwan, you can reach me here at 104 Broadway. My social media is KKwan445 for Instagram, Kevin Kwan on Facebook, and you can email me at kwan@kwan-agency.com, or if you find me on chess.com, how to tame a horse 93. Thank you very much, guys, for your time.
Thank you,
Appreciate
Kevin.
it.
All right, well done.
Thank you very much. Guys, to recap, I really want to thank you for being here and for watching us online. I hope this meeting was something that you got at least one thing out of it, okay, to improve your business. We have the tools in American Nation Mortgage, the knowledge, the contacts to help you grow the business, okay? It's huge when you work with people that actually enjoy working with, and you have a team, because let's say title, when something comes up, title lets me know right away, and then I can take measure ahead of time so I can fix it rather than be reactive. We become proactive. Same thing with the homeowners insurance. If it wasn't for the homeowners insurance relationship that I have, a lot of times, my deals don't work because, the debt to income ratio, I'm off by 1%. I had a deal that I did with Kevin that the mortgage, I wouldn't be able to get the mortgage unless I bring the insurance $10. So the guy wouldn't qualify out of $10. So I said, hey Kevin, I need you to increase the deductible. I'm as a mortgage company, I'm allowed to have up to 5% deductible for the client. Obviously, I don't want everybody to be a 5% deductible because it's way too much money. But if he brings it down $10, okay, by adding a little deductible, okay, I can push the loan through. So all this stuff to have a team ready lined up will make you more effective, okay? As a realtor, I know you don't do mortgages, but a lot of time people ask you about mortgages. The more knowledge you have about the mortgage, okay, the more reliable you become to clients, okay? Because now you can answer questions that they have. And it's funny enough that when the client comes to us, they ask us a lot of real estate questions, which I'm able to answer, okay, because I'm in the business. And that makes me more credible. It makes me more reliable because I have answers for them, and always rely on us for answers. Like I go to surgery and ask questions about title, or how to structure a deal, because a lot of time if you have someone, maybe you buying through a estate sale, it has to be in a certain way. So this is what I have. How do I put it together so they can help you? rely on attorneys, rely on mortgage loan officers, title companies, okay, to help you structure a good deal, okay? So with that in mind, I just want to thank you again for being here, and I hope you got something out of it. And Carlos Kwan with Anthony Kwan, and well, just our information, but we're a family business, and if we can help you, please give us a ring. Here's Anthony. Anthony, give me information one more time.
Again, this is Anthony Kwan from American Nation Mortgage. Thanks for tuning in. We expect to host a lot more events like this. So thanks again, and stay tuned.
All right, thank you very much.
Thank you very much.